am so sad to say that this is the last panel of the first Digital Assets and Securities Conference. And I'd like to thank you all for sticking around. It's not the penultimate, okay? Because if you understand what the word penultimate means, it means actually the note before the last note. It is the ultimate panel. So this is the future of liquid digital asset securities. Featuring, again, General Counsel and co-founder of Vertalo, Gautam Gujral, moderating. Come on up, Gautam. And joined by our esteemed panelists, a collection of builders and authorities on the operation and regulation of alternative trading systems. So let's welcome Pat LaVecchia of Oasis Pro Markets, Konevsky of tZero Markets, and Richard Johnson of Texture Capital.
So again, thank you for sticking around. Should be a great panel. We just want to talk about the future. Okay, so the future is kind of, we've covered so much ground during this conference today, right? I mean, and yesterday. And so, Alan wasn't here, right? And by the way, Richard's might be leaving a little early. He's got a flight to catch, so it's not because he's fleeing your questions or anything like that. Yeah. So just to get started, right? Where do we think in 5 years from now? So that's the period of the no action letter. Where do you guys think you're going to be, respectively, with regards to your ATSs? You want to take it, Pat?
Sure. Can you hear me? Okay, great. Thank you. 5 years from now, I think the three of us are gonna have very successful ATSs. I think consolidation's going to be coming. I think the blockchain will be ubiquitous. I think that the blockchain will be the authoritative ledger with the transfer agents working through it. And through consolidation, one or two of us may be part of larger organizations. But I think this is, my timeline is 5 years from now for this really to achieve the tipping point of traditional issuers, equity, fixed income, asset-backed securities funds, utilizing the blockchain DLT, settlement times zero, tZero, and it'll be ubiquitous. So this is not I mentioned this yesterday. To me, this is not a revolution in technology, but an evolution. And as soon as Wall Street sniffs that there's a profit here, the large banks are going to get involved, but we're going to be ahead of the game.
Yeah, so one thing we're going to do is we're going to start, bless you, enforcing our trademarks, so none of this tZero stuff without cutting us a check. Look, I think the problem, right, that existed before blockchain got into the mix of secondary liquidity for private assets being broken will continue to get fixed, and everyone here is going to be part of that solution. The private markets are also a terrific ecosystem where to deploy technology, blockchain, in a way that is from a regulatory perspective and market infrastructure perspective, less invasive than the public markets. And so you're going to see a lot more innovation in the private environment, where again, there's a problem that needs to be solved with liquidity independent of technology. So it's not here blockchain is not a solution in search of a problem. The problem exists, and that problem can be solved in a better way using digital infrastructure. And so you're going to see a lot more innovation over the next 5 years in the private markets than you'll see in the public markets, where a lot of the conversations about instant settlement, or at least faster settlement cycles than we have now, will continue to develop. People have sort of short memories, but various projects that folks are talking about, including at the central clearing agency level, will continue to develop. But private markets are really going to be the laboratory for innovation from a technology perspective, from a market infrastructure perspective, from a regulatory perspective, and we hope that the environment will continue to support that.
Yeah, no, I agree. 5 years is a decent amount of time, and I think that in reality, the security tokens world started in 2021. Started this. We've all been around for longer than that, but we can't move fast and break things. We have to follow the regulations, and that took a lot of time. We had the panel with David Amon on there. It was painful for a lot of us to go through that. Even Vertalo, you guys set up a couple of years ago, but it's really just starting as of the kind of end of 2020 when we had those no action or policy statements coming out of the SEC clarifying how they want or how they're comfortable with the space evolving. So where will we be? I think we'll all have hundreds of securities trading on our ATSs. I don't know what the market cap will be, but I think we'll have a lot better functionality. We'll be able to do some of the things that are happening in DeFi. So we'll be doing lending. People who invest in private securities can put those securities into a smart contract and borrow against them. That's going to improve liquidity overall. I think we'll probably be able to bring in some form of market making in private markets at that point. And I think we'll have, makes me very happy, that the blockchain will be the official record of ownership in many cases. And that's when I think we can really start. That's when the foundation starts, when we can really do some exciting things, because that's what the technology is about. I don't think we'll be doing consensus-based settlement in 5 years, but that will come. And yeah, so I think that there's a lot. It's going to happen very, very quickly. So it's exciting times.
So do you guys see a world like in 5 years where people utilize custodians during those 5 years and then started moving back to their own wallets? Like, how are you building your businesses to reflect whatever your vision might be?
Yeah, look, I think if you go back to the vision for blockchain, the vision for DeFi, it's very diffuse, decentralized by nature, by design, by philosophy. If you look at the way the industry has been moving, it's been moving towards greater centralization. That's true with crypto, that's true with securities. So as we look at the next 5 years, our hope and expectation is that there's going to be enough comfort with the model that's built around central custodians, again, whether with crypto or digital asset securities, kind of unified trading venues, so that you can start to push the conversation further towards the vision of this, what SEC Commissioner Peirce called, the beauty of the self-regulating, digitally native value ecosystem that sits on the single global technology layer and allows users and investors to interact in a minimally intermediated fashion. So, there's a bit of, if you look at kind of the process of kind of expansion, contraction, and then expansion again, I think that's what you're going to see. So, and hopefully you're going to see some of that movement towards greater decentralization as you get towards the tail end of this 5-year period that you mentioned.
I'll just add regulatory and compliance forward, more centralization. I completely agree. In regards to our approach, we're what's called the 3-step process right now. I mentioned yesterday we can do an atomic swap. We can do trade settlement plus zero. I didn't want to have to pay for the royalty stream.
That's too late.
And we are also moving to self-custodial wallets. I think all of us have had discussions with like MetaMask institutional consensus is very far along on an institutional quality wallet. There are a number of others, Fidelity, many names out there that we're going to do both. That's our vision. in 5 years, convincing the regulators of that, both the three-step and four-step process. And I agree, it's moving to centralization, which benefits us. Crypto's moving in that same direction. It's really KYC and AML, and we deliver on that. You know, the odd thing about the blockchain is that it's actually a better record for the regulators than anything available today. It's immutable, and it's transparent. So they can see every trade, every transaction. They can link it back to a wallet today. So it's a part of the resistance for those of us who are deep into it, into DeFi. One of our backers, as I've mentioned before, is MakerDAO, one of the oldest DeFi platforms out there. And we're thinking about DeFi and incorporating it. And I think it's going to be a very exciting time in terms of innovation as well.
Yeah, I don't think there's going to be a huge shift to self-custody. I think people like banks or brokers or people taking care of stuff in case they drop their phone in the river or something. These things happen, right?
I saw it happen the other day when I was kayaking. So
There you go. Somebody could have lost all their securities. We, you know, unless you can go back to Vertalo, who's their transfer agent, of course. But I think I want to pick up on Pat's point. I'm really surprised that the SEC or FINRA haven't been more engaged. And you know, you can have all this transparency into all the transactions your brokers are doing, instead of coming to us once a year and asking us to give you all these documents and all these things like that, these blotters. Why don't they get more involved and do that and operate a node on the blockchain? I think it'd be beneficial for everyone. Maybe we'll get to that point.
Yeah, you know, my guess is that projects around digital cash will lead that conversation, and securities will follow. That's just my guess. As you look globally at what's happening in other countries, U.S. is going to be slower, and we hope whatever gets put in place is consistent with our values as a society, including around privacy and other topics. But if you look at what's going on around in other places, countries have been a lot faster to the central bank digital currency conversation than they are around digital security conversation. And there are various, you know, perspectives you can have on that practically and philosophically. And I'm guessing that will continue to happen. I agree, you're not going to see a seismic change in the 5 years, you know, away from centralization where we're getting to now, but you might see comfort with technology in the centralized environment that will then give people, particularly regulators, comfort with trying to remove some of the intermediation, some of this centralization that's in place. Look, you'll never change the fundamental human psychology that you're trying to solve, people not trusting each other. That will never change. And so, you know, to your point, people like having banks around. People always are going to want to have something around. And at what point are you going to be more comfortable with that something being technology versus a bank and people with a bunch of registrations? That's the question. So.
I tend to agree with you, you know, because I don't want to be macabre about it, but we're all going to die, right? But we want to leave our stuff to somebody else, right? So if you have it all decentralized and, you know, when your kids are off doing other things, you need somebody who's going to take care of that function, you know? So, you know, there's just a human reason for it.
But that's the transfer agent for securities. The other thing, crypto you could lose, right?
Yep.
Crypto, it's happened to me. Not a lot, thank goodness, but it's happened to me. Digital securities, I've got a problem. Somebody just fraud, I go to Vertalo.
Yeah, that's right.
Attestation. I get burn those securities. We had a long conversation, I'm sure you did as well, with the regulators about this. They really wanted to dive deep what happens in the event somebody loses their wallet, et cetera. So I personally don't think it's as big of a deal for securities. For crypto, it's a completely different issue.
Right, like Dave's grandma, right? And the, you know, what was it, North something Railroad, right? They had to go to the transfer agent to figure out, you know, what to do with that stock. So, you know, so let's stick to this liquidity for you know, privately issued securities for, you know, for a little bit more, right? So I'm not talking about a smaller private issue, but let's say you have a larger private issue, right? Do you guys foresee like people cross-listing, like people listing on multiple ATSs at the same time? Or would you just pick it up? Do they even have to list with you? Can you just decide, no, I want liquidity in that stock on my ATS? Do you need permission?
I mean, well, if you look at public markets, that's what happens. Obviously,
Right.
everything, we had everything traded on Nasdaq or NYSE, and then because of something called Reg ATS, you started getting proliferation of ECNs and other ATSs, and they started trading everywhere. Pat made a point the other day. Well, we need to build a bit of a brand. Give us some time to build the platform. But after that, yeah, and that's also what happened in public markets when you had, Credit Suisse Crossfinder came out, and that was only for Credit Suisse clients. And then eventually they opened it up to other brokers. The blockchain is going to make that easier because if we're all looking at the same ledger, then we can track the positions, we can accept the orders more easily. So there's a lot of potential to do that type of stuff.
Yeah, I agree. Look, I think if the vision is, again, there are no borders, either geographically or in terms of particular institutions, because everything sits on the same ledger with minimal intermediation. But until you get to that vision, I think you are going to have this kind of archipelago environment where folks do ring fence their, their territories. That's not always the right way to think about it. Look, fragmenting liquidity is not always a great thing, and so on the other hand, I think there's a lot more co-opetition that can and should happen in the industry as we try to, deal with existential topics that impact all of us that are far more important than X, Y, or Z market share at this point in time in 2021.
Yeah, but I think you're right, and also we're at the point now where we're building the liquidity. There's not enough liquidity anyway. It doesn't make sense to spread it out across multiple different platforms. Not yet.
But just sticking to that point also, right, which is that, do you guys foresee within the next 5 years or at the end of that time period, have you guys been thinking about, okay, well, what if we have a security that we were trading here, but we also want to have it trading in England, right? Like, which model do you see there? Do you see just another listing in England, or do you see an ordinary domestic and then a GDR?
So the approach we're taking today, and we could pivot, we think we're right with this approach, is we're going to have partnerships across the globe with similar types of, and not necessarily ATSs, it could be exchanges, whatever the right terminology is for those specific regions, and have global listings, not just for equities, but across the board. We're going to be 365, 24/7. We can accept foreign investors like my colleagues here can as well. And what is that a requirement? Provinciality is very important. From my perspective, that's what I've always seen. So having a U.S. ATS running foreign corporations, equities, et cetera, eventually it's going to run into some problems. So our approach is partnerships. That fellow, John, yesterday with
Yep.
Abe,
Yep.
his approach is he's getting regulated in every country in the world. It's like 62, as I recall. I just think that's a big lift. And so we started discussions.
Right, he gets up at 2 in the morning.
Yeah, he doesn't sleep. Yeah, that's right. So our approach is partnerships on that front. But I do think global listings, et cetera, are going to be part of the growth of this ecosystem.
Yeah, I agree. Look, I think if you look at first principles, the answer, you got to ask yourself, what problem am I trying to solve here by going to a UK venue or any foreign venue? Securities markets, I think, we've talked about the 5-year horizon, we've talked about centralization, and we've talked about the vision of complete kind of global nirvana. Securities markets have been fragmented and balkanized and individually highly regulated, provincial to your point, for years and decades. My guess is that'll continue to be. I think prior attempts at convergence, pre-blockchain, haven't exactly worked. Whether technology will force that function is still an open question. I hope it does. But securities markets, including from a regulatory perspective, will continue to be balkanized. And so the first principles answer could be that, well, if I want to have an active retail footprint in the UK, I have to do this. I may be able to accept customers in reverse solicitation basis from UK and 57 other countries, but if I want to have active retail presence in the UK or country X, I have to localize. And if I'm going to localize, I can either build or partner, and building for all sorts of good and bad reasons might be really challenging. Partnering is a way to go, and you kind of fall back into this network model that Pat describes.
Yeah, I mean, just because a digital asset like Bitcoin can trade globally around the world and move from Korea to Japan to Europe to the US, doesn't mean that securities can, because at every country's border, there's new regulations to deal with. And it's not just up to us, the ATSs. Does the issuer want to deal with these regulations? Yeah, you can trade Apple in Germany, but it's Apple. They've got all the money in the world. They can afford whatever regulatory compliance they need to do in each country and whatever filings. So given we're in private markets, I think it's going to be, I don't think there's going to be a lot of demand from issuers, frankly, for that. I think there's some interesting opportunities around, let's call it an ADR. I don't know if it will necessarily be an ADR, but something like that, a token representing an underlying security in another country. We could see that. But then again, if you look at, for example, the ADRs, let's say European ADRs that trade here in the US, the volume is much greater in the morning when Europe's open than it is in the afternoon, because people like to be, you want to trade when there's liquidity, and there's going to be more liquidity for European stocks when the Europeans are awake. And I think the same is going to apply.
Yeah, I agree. Look, I think there's one thing to keep in mind, that secondary liquidity for private assets is critical. The system has been broken, it needs to be fixed. At the same time, you shouldn't assume that once you fix it, and fix it in a functional or optimal way, that these assets are going to have the same trading profile and trading dynamic like a large market cap public security. That even with well-functioning, continuous, automated liquidity environment, these are still going to be, by reference to public markets, fairly thinly traded securities, fairly niche assets. And so the first principal question is, again, why do I need the UK? Why do I need country X? Because you're starting from that premise. I think, your point about crypto is a good one, whether that's perception or reality of global best execution across a number of pockets for crypto. I think that's a separate conversation. I think if you're following what's going on in Washington from a political and policy and regulatory perspectives, that's probably going to change as well. And so you are going to see more of a securities-driven secondary trading ecosystem that's put in place for crypto, whether it's because of the extension of existing jurisdiction of, hey, these crypto are securities and they should trade like securities. That makes sense, which, by the way, would be a good thing for digitally friendly, digitally native ATSs like us, or whether because there's a new regime that's put in place for those cryptocurrencies where the ship has sailed on arguing that they're securities. And there's probably only a handful of those. Bitcoin, Ethereum are the obvious ones, but
So, today there is a Rule 144 under which these privately issued securities can trade. But one of the requirements there, and I don't see this one going away, is that you have to have some type of information about the issuer available. How are you guys dealing with it now? How do you think you're going to deal with it going forward?
Well, it's really on the issuer. At the end of the day, they're required under regulations to provide that information on a timely basis, sometimes quarterly, sometimes monthly, depending on the type of security that's out there. Our platform, so smart contracts, that's our approach, bespoke. So you can put all the documentation at the time for that security, fixed income instrument, ABS, et cetera, into that coding smart contract. And we'll have linkages through that smart contract to updated data. That's how we're approaching it. And our website will also, well, not website, but trading venue will also have documentation listed on it on again, on a regulatory basis. So our approach is whatever the public markets do, most likely, depending on the size of the issuer, they should follow. At the end of the day, if you're in the equity space, hopefully you'll have over 500 up to over 2,000 investors, so you'll be required to do it. So it's like good practices to start early. That's our recommendation. For fixed income and ABS, it's different. For SEC-registered closed-end funds, it's different. But we want to be, and I think everyone on this panel, because we've been going, I just want to make one comment about an earlier point made, but we've been going through the wars, and we love the regulators. I know this is being recorded. FINRA, SEC, they're the best, but we're partners with them. And we are partners with them. And when the question came up about where we're going to be in 5 years, I think co-opetition, I think Alan mentioned co-opetition. We are, yes, I think co-opetition is going to be a big part of this, but because we still are in shifting sands. We deal with the regulators every day. I was here, I had a call with the SEC and FINRA in the last 3 days. Short calls, no problems, but clarification, and that's normal. And we are at the forefront. David Amons earlier today suggested that. He's like caught in the middle. I think he made the comment that before one of the statements came out, it was he as an advisor to certain groups at FINRA wasn't able to give definitive guidance because of the SEC. At the end of the day, the SEC is FINRA's regulator. So I think we will be trying to navigate these shifting sands and cooperating as well to build this ecosystem.
Go ahead.
I was going to say, I don't think data is going to be a problem. The data transparency that you spoke about. I did a presentation earlier in a breakout, and we've done some research. It's on our website. You can reach out to me and I can send it. But we reached out to issuers and asked them how much, private company issuers, how much data they disclose. I think it's like 56 said very detailed information to their shareholders. We asked the follow-up questions like, would you be prepared to disclose, of the ones who didn't, of that 44%, would you be prepared to disclose more information if it helped you, connect with more investors? And when you add that question, it took the numbers up to like 86% are comfortable sharing detailed information about the company, as long as there's some controls in place. Maybe they don't want to be public, they don't want to be filing 10Ks and 8Ks and all the rest of it, but giving enough information so that investors can make a reasonable decision, it's essential. We won't take a client on if they don't agree to that, because there's no point. Then nobody's going to buy it if there's no information.
Yeah, I agree. We're in the same boat. If I think about kind of 4 or 5 things that keep me up at night about the industry, disclosure is one of them, and it's absolutely critical. If we are to continue to develop and address the broken private market secondary liquidity situation and to advance the role of blockchain and smart contracts in this ecosystem, we have to ensure that issuers make appropriate disclosure available to the investors. Now, as Pat said, there's a range of rules that applies to broker-dealers, that applies to issuers, in some cases applies to resellers, and you kind of have to coalesce these to come up with a pragmatic regime and a set of requirements as an ATS operator for issuers whose securities are quoted on your ATS. Now, it's not going to look the same as a 34 Act regime for reporting public companies, although it's going to look to that set of data points and come up with a set of requirements that are important. Now, look, we had experience with issuers who do more than what we require. People who want to do less don't trade on our ATS. And so there's an irreducible minimum from an investor protection, from a market integrity perspective that's absolutely critical here. And that's one of the topics where you have you need to be pragmatic, but you have fairly limited room to race to the bottom.
Right. So one of the things I love about this conference is that you learn something in a different room, and it influences your thinking with regards to something that we were going to talk about today, right? Which is, what's the future look like? And one of the things that you mentioned earlier, Richard, in your study, was that issuers that you spoke to anyway, had a very strong preference for controlling who is on their cap table, right? Now that becomes obviously a gating factor to listing on one of your ATSs because they don't know who that investor is, the future investor is going to be, right? So what do you think changes the minds of those issuers that are still hesitant? Do you think it's going to be investor-driven, like existing investors saying, I want out? Or how do you see that happening in the future? Because you obviously want to list a lot of good names of good companies on your ATSs.
Money. I think if it's easier for them to get money by being able to access more investors, and we can work with them to put controls in place so that private companies, they don't want their competitors to buy in, so creating a blacklist perhaps, or they want to control ownership so nobody has more than 5%, or nobody can get on the cap table for less than $100,000 or whatever the number is. So if we can put, and now we've got a digital ledger here, and we've got smart contracts, we can program all this in for them and put these protections in place up front so they don't need to have the ROFR on the back end. And just to say again, the follow-up question in that study is, would you relax control of ownership or getting on the cap table if there were suitable controls in place? And a lot of them said yes, they would.
And are you guys doing that?
Well, we haven't launched yet, but when we launch, it's going. I use the word bespoke. So exactly to Richard's point, some of the whatever concerns the issuers have, you can build into the coding. Look, but let's be realistic. At the end of the day, if you have a lot of restrictions, who's going to trade your security? Yeah. It's going to be readily available. That's very important. All the information, documentation. Let's go back to 2008, the financial crisis. Hardly anybody knew AIG was at risk because the documentation was so poor. So in 5 years' time, across different security classes, that documentation will be available in the smart contracts, which is really exciting. Again, going back to the comment earlier, that only helps the regulators. It's perfect information. It's transparent. But yeah, that's so. Taking a step back, my background, investment banking years, if the only reason to get into what we're doing today, ATS, was it's better technology, I wouldn't have done this. For me, it's the smart contracts, it's the coding, it's making everything more transparent, not necessarily democratization. I'm not a crypto guy, from 10 years ago, which is fine. It's just I'm a Wall Street guy. I have a different perspective, but it's improving the capital markets, and that's what excites me. GameStop, in regards to settlement times at naught, we.
T-naught? T-naught is great.
T-naught.
That's also trademarked.
At tZero. That's going to, the GameStop fiasco that we just went through, Alan's comment and Richard's comments earlier, short memories, that's not going to happen again in regards to what occurred with DTCC. These are structurally tremendous improvements, potential improvements for the capital markets.
Yeah, look, I think our perspective on it, if it's an issuer-driven decision, so if an issuer has particular structural or business priorities or regulatory priorities around controlling the nature or number of their securities. By the way, every issuer on the platform has, at a minimum, a priority to control the number and type of their shareholders from a perspective of not inadvertently becoming a public company. Becoming a public company is great. It's an important thing. People are happy about it. CEOs get to go and ring bells, fake bells. But you don't want it to happen accidentally because you get all the burdens, none of the benefits. And so at a minimum, controlling the 2,500 holder picture is critical. There's some important structural solutions that help with that if your shares are held in street name versus kind of straightforward record ownership. And that's why there's a difference in the digital ecosystem between digital asset securities that are self-custodied, that are held as of record by the investors, and so there's look through versus street name holding through a broker dealer for digitally enhanced securities, so those that utilize blockchain but not at a level that's sufficient to make them digital asset securities under the SEC's evolving definition. What that's going to look like for special purpose broker dealers if and when they come around, and whether there's you kind of have the benefit of using street name holdings so everyone counts as one, or whether you have to look through, in which case it's going to be much easier for people to inadvertently become public companies. That's one of the questions we ask the SEC. But at a minimum, every issuer has an interest in that level of kind of demographics control. And again, other people have very specific concerns. I would hope that if you've made a decision to give you investors access to continuous automated liquidity, for example, because that lowers your cost of funding. You're a real estate sponsor, that lowers your cost of funding versus the premium you have to pay people for locking up their shares for 5 to 7 years. You've also crossed the bridge on trying to not to micromanage your cap table. But if you wanted to, and you were prepared to deal with your investor community, you can. And technology enables that to happen in a way that's far easier than the legacy spreadsheet intermediary-driven ecosystem.
So, we're pretty optimistic about the future, what it's going to hold for, currently very illiquid private markets, right? Do you guys have any concerns as to what might bring additional scrutiny, slow it down? What keeps you up?
Well, everything that's happening on the crypto side. My concern is we're DeFi forward. We're thinking of innovation, AMMs, collateralization, yield farming, et cetera. But there seems to be a knock-on effect to what we're doing on the blockchain. And we are stablecoins, for instance. So we got approved for CBDCs and stablecoins, et cetera, for digital security transactions when we got our ATS. And we are, so I believe Chairman Gensler came out recently and said all stablecoins are securities. So that's problematic for us. That's problematic for decreasing settlement times quickly. That's my concern. What's happening on the crypto side? Michelle Bond was here yesterday from Atom. She made some comments that were encouraging. We're a member of Atom too. That it is regulation by enforcement. We're seeing that. I mean, Ripple's already out, but Gensler's only been there like 6 months. And Uniswap just got a Wells notice. The rumor is 130 companies got Wells notices, a little more than that. So that's concerning. And a Wells notice is basically the SEC coming out in layman's terms and basically saying, we think you're guilty, prove to us you're not, after extensive, being a security. That's what that whole approach is. So that's concerning. On one end, Michelle mentioned that some legislation's coming out from Senator Loomis and Sinema, Republican Democrats, or some bills in the middle of October that'll be beneficial to this ecosystem, our industry, which we're really excited about. I don't know exactly what it is. It's tied to an SRO potentially, but when it comes out, that's a big positive. So one other positive I saw today, I don't know if anybody saw this, it was in the Journal, but there was this group, it was like big news, Fidelity invested, I believe Goldman Sachs, and it was called, and I may be wrong with the name, Capital Markets Partners or something along those lines. And what they're going to do is improve the syndication business, which up until now still is telephone calls, faxes, emails, and they're digitizing it. We're talking about the blockchain and almost instantaneous settlement, and the Wall Street Journal, I believe its front page of the C section is just, very excited about syndication no longer incorporating phone calls. So I think that's a huge positive from my perspective.
I'm going to have to leave you guys, but good job. Thank you.
Hey, safe flight.
Thanks, Richard.
Thanks, everyone.
We've got a few minutes left, and if you guys have any questions, now would be a great time to ask them. I think.
if folks don't ask questions, there are a couple of lame pre-prepared questions scattered throughout the room. So.
Now, see, every rule, you can point to a person where that rule was created, right? And I just have a feeling that there's going to be some hiccups along the way, primarily because I've seen this all my life, right? Where something happens, somebody does something malicious or it's just plain stupid, right? And then a lot of investors get hurt, and then, next thing you know, you have a whole bunch of rules that come out, right? So I'm encouraged by what Michelle said, right? And I hope that that can actually pass now in this divided Congress, right? And there's certain senators out there which I'm sure don't want to do anything to help this industry, but I'm also certain that they can be influenced, right? So I think we should be more politically involved, because if you don't get involved, that's been my experience too. If you don't get involved and try and influence policy, you shouldn't be surprised when the people making the policy don't have your best interest in mind.
Yeah, I think, look, the infrastructure bill and a fairly narrow kind of niche, nerdy IRS reporting provision that, that whiplashed the crypto industry is a good example of that. The good thing is that there's an increasing number of members of both houses who are digitally fluent and digitally friendly, and that's a good thing. And so being connected as an industry, and there's a growing number of terrific industry organizations, maybe more so on the crypto side, but certainly but also touching securities, that's been leading that set of conversations. You've talked about Senators Loomis and Sinema in the House. There's a blockchain caucus, right? I mean, members of both houses tend to have their specializations. People kind of work a little bit in silos, and so folks, there's a number of folks who pick that as at least one of their number of interests, and so there's some terrific pieces of legislation that have been proposed, including by Representative Emmer and others that they get to a range of topics, including definition of a security and others. And so having connectivity with their staff, having connectivity with the members where appropriate as an industry and individually is important. Part of the feedback you get from the SEC, and we've spoken with a number of folks, is that appreciate what happened last year, and we do. We appreciate the no action letter, we appreciate the statement, and recognize how important that was as a development, and we do. Now that doesn't mean the conversation stops. We continue to have, constructive, focused, vigorous dialogue about things that we want to be that need to continue to change. But I think the interaction with the regulators shouldn't come at the expense of not engaging with policymakers, whether in the context of new legislation coming into effect, whether in the context of their role, of their oversight roles over the regulators, or other circumstances.
I totally agree with that. And, Dave and I have already talked about the fact that the next time we all get together, it's going to be in a much, much bigger room, right? We are going to have more regulators here talking to us, but equally importantly, listening to us. And hopefully coming to the realization that what we are people that want to play ball according to certain rules, but we just want the rules to be clear so that, you can cry foul at the right time, but not at the wrong time.
Yeah, look, you got to be very clear. Like this whole "is it a security, is it not a security" debate. People here on the stage, by definition, have decided to play by the rules. I'll wrap up in a second. Yeah, I'll wrap up in a second. Have decided to play by the rules, and so because we are treating these assets as securities, and we're trading them as securities, we're custodying them as securities, we're settling them as securities. So that's a very important the threshold question that, at least the perception in the media that a lot of folks are wrestling with, doesn't apply to us. I'm sorry.
If we were going to be politically active, is there a place to go that will tell this industry group which politicians we should work with, which staffers we should be looking at, and what bills affect what we want to do and hope to do in the future?
There are a number of organizations right now. There's it's an excellent question. Blockchain Association, Digital Chamber of Commerce, ATOM. There's a global association that's based here in the U.S. There are a number. I belong also to the Wall Street Blockchain Alliance, which comes up with position papers. What they all do is send in position papers to the regulators, and any one of them, yesterday Michelle mentioned Senator Toomey, for instance, out of Pennsylvania, and his staff. He is not running for re-election. He's a Republican. He wants to make this his legacy. He wants to make digital asset securities a granular definition and a roadmap as part of his legacy. That was the inside scoop that we got yesterday. So there are a number of associations out there. The problem has been that there hasn't been a lot of lobbying money behind it. And to Alan's point about this tax issue regarding what's a swap, I mean, the IRS rules. We're not even touching that. What's going to happen there? The industry woke up, meaning the crypto side. But again, I see it as connected. And now money is starting to pour in. I believe that new associations are being formed as we speak, specifically focused on policymakers. So the industry has woken up. But by industry, I mean crypto and our ecosystem, digital asset securities, has woken up. And I would just stay tuned in regards to, what policy or lobbying efforts will be put together. We're going to be behind it. We already are connected to our local congressman, who is the #2 in the Financial Services Committee, Himes, who had a CBDC hearing, subcommittee hearing, and I spoke to him right after that. And he is very educated on the topic. He's an ex-Goldman guy. He gets market structure. He would be a friend, but at the end of the day, he's not hearing from enough people. So he would be someone we target, for instance.
Yeah, and I think, look, Pat, you're absolutely right, and and you mentioned all the right organizations, from kind of Perry and Boring at the Chamber of Digital Commerce to ATOM to others. It's a lot of great connectivity, and I think those are good folks to get close to right now, because there's active engagement that has been going on and going on right now. The other point is that we got to be more creative about our advocacy, including across the aisle. There's this perception, well, Republicans care about this more than Democrats, or the other way around. But if you are the kind of person who cares about too big to fail institutions, right? There's at least one person in the United States State Senate who cares a lot about that. You should like decentralization, because it de-risks society from the rents that too big to fail institutions, based on that kind of philosophy, impose on society. And sort of argument, so too big to fail is an important point that hasn't been talked enough about. And so there's a lot of cross-aisle appeal that I think that hopefully, bless you, we'll continue to see. So.
Yeah, and Gautam, you've also spent some time talking to SIFMA, and that is a way to leverage a much larger kind of network. These associations that we just spoke of before, they're relatively small, they're underknown. SIFMA, though, can leverage the big guys.
So one comment about SIFMA, though. I believe you're a member of SIFMA. I believe tZero is. I may be wrong. But we applied to SIFMA a year ago, and it's run by the large Wall Street firms. We didn't get rejected. We're on hold, which is fine. And not only us, a number of organizations. I'm not trying to make a joke of it. It's just, it's run by Goldmans of the world and the large institutional investors, where, at the end of the day, this is a threat. So SIFMA is taking a very cautious approach as to who to add to their membership. There have been some, I believe tZero is one, and there are a couple others that became members several years ago. But now their board has decided, let's have a blockchain plan. So they're going to have a blockchain subset, but it's not available yet. So, you know, it's a great comment. That's just been our experience.
Yeah, I agree.
But we
Dave.
talked to them nonetheless. No, but
Thanks for reminding me. It was very painful.
no, but we talked to them nonetheless, you know, because we have friends there, so it's all right.
Can you get? I know 2 members of the board. I still couldn't get anything going.
I don't know what you did to them, man. Well, I think this sums it up very nicely. Thank you, and thank you all for making this all possible and a great conference. So,
Thank you.
Dave, you want to come up here?
Thank you.